What is up, everyone? Thank you for joining us for another week of This Week in Crypto. I'm your host alongside Dino, and we will be going over plenty of fun stuff this week after a very shaky week, as many of you know. If you guys like volatility, this was certainly the week for you. We had quite a bit of damage as far as bulls getting a bit hurt after a bit of euphoria kicked in, and we'll talk about that as well as what the on-chain metrics were looking like leading up to this semi-crash, we would call it, and what it's looking like going forward over the next week or two. So join us for a bit of discussion about Bitcoin. We'll probably focus largely on that, but as always, toward the end, we'll take requests on analysis on certain projects that you're looking into, what kind of dip buy opportunities there might be, and plenty of other things that we've kind of seen over the past week that we think will be very interesting for you all. As many of you may have heard, we have a Black Friday sale, and we can officially announce it now that it's Black Friday. For those Americans who are watching, I hope you all had a fantastic Thanksgiving. I know I did myself. And for anyone who would like to sign up for any amount of months and have been waiting for the prime opportunity to get it on the cheap, now is your time. Just enter the code Black Friday 2020, no caps, no spaces, and you will be able to instantly see that discount come up on the pricing page when you check out, and you can enjoy our subscription services for as long as you choose to enjoy them. So right now, I am showing off the daily active addresses of Bitcoin. Anyone who has tuned in previously, you probably know that I and Dino and the rest of our team believe quite strongly in what this metric shows. It's a powerful metric that shows off the amount of unique addresses that are transacting on a daily basis for Bitcoin. And this metric is, of course, available for any of our assets here. So obviously what we're seeing here is a rise in daily active addresses. This is the previous year. But notice that if I zoom in here, we'll go the last 3 months. I'll go full screen there. We've had a bit of shakiness, right? It peaked up at about 1.2 million about 2 weeks ago, right? And since that time, a little bit of a drop off here, right? Back when we were still at about 15.8K to 16K. It jumped back up after we hit about 18K. It stayed a little higher as we got to 18.6K, but look what happened when we kind of dropped back down. We had that big drop in daily active addresses where it went down to 866.49K. That's a big drop from, you know, that high of 1.2. We'll call that something like a 28 to 30-ish% drop. And then it recovered a little since then, right? The peak when it got up to about 19K, or I think we had around a 19.3 to 19.4K high. We got up to about 1.13 daily active addresses, and then it just dropped slightly. And now we've got a current day that's going to be very interesting here, as a lot of people have the day off, a little more time for investing, and I think it's going to be very telling what this bar looks like when people are off and they can decide whether they want to spend the day actually using the Bitcoin network to do some transactions, or if they're going to stay off and wait for the volatility to settle down. This is the point where we find out whether people really are interested in buying those dips, if you really want to call it that, you know, at the 16.8K level that we're in now. A lot of people still think this is very high, and we'll go over that a bit with the social metrics, but many people were kicking themselves for not buying once it got up to 19.3K. So if they want to put their money where their mouth is, this is that opportunity. And we'll see kind of a battle between those longs and those people who are very fearful right now. I also want to show this off, guys. This is our trend line drawer. It's brand new, it's beta. So make sure you have beta enabled in your account settings, and you'll be able to actually draw trend lines like this. So I can show it off and say, look what daily active addresses have done between late October and now, right? Any metric this can be used, just highlight this, give it a click, and you'll see it pop up. All right, I'm now going to quickly show off our screener just to give a recap of what all the projects have done here over the past week. As we can see, Bitcoin is down negative 7.2%. We had plenty that went up though. Ripple is still up 72.3%-ish. We had DOT as a big faller, Stellar as a big gainer. We had VE Chain, Tron, Cardano, many projects that are still in the green. And this is kind of an interesting mix between risers and fallers. It's quite equal, around a 50-50 ratio within the top 100 blockchains. But if we see any more downside with Bitcoin, you'll see a lot of these greens turn to red, guys. I do want to warn you that we still had a very dominant altcoin market from about May to August, or even up to about September 3rd when Bitcoin had its first big drop off. There's still a lot of projects that can bleed more if Bitcoin falls. Now, if it rises, you'll see altcoins probably start to take off, in my opinion, quite a bit. And obviously our on-chains and our social metrics are going to be key in finding out which ones are the ones to really get your money into. But what we're going to try to decide here is whether it really is a solid time to be in Bitcoin, therefore the crypto markets, right? So just a quick recap there. I don't want to spend too much time talking about all 100 projects. We really do want to focus mostly on Bitcoin here. I'm going to actually show our MVRV divergence model first. If you're a Sandbase Pro member, you may have already seen the messages we put on Discord, where we have a link to get this, and then you can simply go to File, make a copy, and you'll have your own version where you can simply plug in your Sandsheets API key, right? And once you do that, all of this data will automatically show up, and you'll have your own personal version of this Sandsheets chart that can't be used by anyone else, can't be modified. It's all yours to tweak however you'd like. You can add projects, remove projects, etc. If this is the first time you've seen this model, it is essentially showing what the bullish versus bearish divergence is based on the average trader returns of 6 different time framed MVRVs. And it's pretty powerful. And if I were to have showed this to you guys on Monday or Tuesday, all of these were looking orange and red. I don't think there was a single asset that was actually in the bullish divergence territory, and it worked quite beautifully and indicated that we were due for a correction based solely on the fact that there was such a high level of average returns for every project, both on the short term and the long term. Each of these white to grayish bars are representing the divergence from that time frame. So for example, if people are up 10% over the last 7 days on average for Bitcoin, that's a major bearish divergence because 0% is that resting average, right? So I won't get too much into the explanation, but we have documentation on our academy that goes over MVRV more. And essentially what we're seeing now is that things have neutralized quite a bit because of the fact that the 1 day and 7 day MVRVs are well into the negatives now. A lot of people got burned over these last 7 days. And my mouse is loading here. Hopefully that resolves in just a moment. There we go. So what I wanted to show here is the actual raw MVRVs. This shows the amount that the average traders are down over the last 1 day, about negative 0.5%, not that big of a deal. But that 7 day MVRV, the average trader being down negative 6.6% is the big reason why this divergence has neutralized. And if we look solely at Bitcoin here, it's back to about where it should be. It's still actually a little bit bearish, but it's much more encouraging than where it was if I had shown this to you just 2, 3, 4 days ago. When it was very close to this danger zone, right? This red hash line here is the danger zone. The green hash line is the opportunity zone. We have a couple like Binance Coin and Fetch that are looking bullish. I don't want to spend too much time talking about why, but for the most part, it's looking like many altcoins have a good opportunity here. Ethereum actually is still on the slight negative side, but more or less can be considered a neutral MVRV option at this point. And I definitely encourage you guys to explore this. It's available for Bitcoin, Ethereum, Litecoin, Binance Coin, Ripple, and any ERC20 project that has at least some notoriety. So that is quite interesting to see that we've jumped from, that negative 0.8 range to now just negative 0.19. So there could be a short-term opportunity. Just keep in mind that the 30-day, 90-day, 6-month, and 1-year MVRVs are still well in the profit range for the average traders, and those will eventually neutralize either due to some temporary bull trap or to an actual dip that is more long lasting. But we are better than we used to be, right? The 1-year MVRV was around plus 50% above. A lot of these were much higher than what they look like now. So we're at least moving in the right direction. And, honestly, we haven't dropped that much for those MVRVs to get a little better. Being down negative 7% in the last week, obviously not fun for people who are buying on the rise, but it does cause these types of metrics to get back toward that bullish territory, if not gradually. So
yeah, it's also, Brian, if you look at both Bitcoin and Ethereum's 30-day MVRV, we're currently at 1%, plus 1% for both of them. I think maybe slightly higher for Ethereum, but the idea or the current state of both networks is that the unclaimed profits of short-term holders are quite low at the moment. So the 7-day basically swing traders, 7-day holders are in the negative, but 30-day holders are basically people that have been kind of accumulating into this rally and have been trading the rally. They're sort of around the break even at the moment. So if you want to look specifically into Bitcoin's 30-day MVRV on a chart, we talked about it last week, and I think we talked about it a week prior as well. We thought that it was getting very high and that it was just kind of priming for a correction. So for those unfamiliar, what Brian's going to show you now is Bitcoin's 30-day MVRV, which is basically the average unclaimed profits of short-term Bitcoin holders, right? So you can see the rule of thumb of this metric is that the higher the MVRV goes, the more incentive there is to sell and begin to take profit, simply because your bags are beginning to overflow, and the more in profit you are, the more risk averse you become, and you start to skim off the top a little bit. So usually the way you kind of look for danger zones in this metric is by analyzing historical performances and essentially looking at where we were, let's say, throughout the last year in terms of Bitcoin's 30-day MVRV. Where did we peak and where did we bottom out, to kind of look for patterns and figure out what were the usual points at which short-term Bitcoin holders started to offload their bags and started to take some profits. So the fact that just before the correction, we were at a year high as far as Bitcoin's 30-day MVRV is concerned, and also as far as Bitcoin's 365-day MVRV is concerned, it just pointed to us the fact that people have been sitting on their bags for quite a while. The unclaimed profits have been rising throughout the month of November, and shortly before the Bitcoin breaking all-time high, they entered entirely dangerous zone. So now we are back into sort of a neutral territory. After I think we peaked at about, what was it, Brian? Like 20?
About 22%.
Yeah, so we dropped from plus 22% in average unclaimed profits to just plus 1% in the last like 72 hours. So that's a massive drop off. Now, ideally, you would want to see the drop off even higher or even lower, because the lower the MVRV gets, as some on-chain analysts believe, the more or the better opportunity it is to accumulate. Essentially, when MVRV goes into negative, that means that specific holders are on average actually losing money on their initial investment. So there's not going to be a whole lot of sell side pressure because people are, would be only realizing losses. And so usually that's, according to MVRV, those types of moves mean that the network is undervalued on average. So currently we're sort of in the midway process of that correction. Ideally, we would see it drop a bit lower before considering an entry position, but we're definitely no longer in that super dangerous zone like we were a week ago, which is, it's optimistic to say the least.
Yeah, I'm trying to draw just an approximate 0% line. I think it might be just a little up around here, but as you can see, most of these days for almost the entire year have been above 0% pretty significantly. So 30-day average, if you went back further, like much further to like 2017, you'd see that it hovers. Ignore this because the axis has changed, but it'll actually hover around 0%, which is right around maybe here or so. So for the last year, especially since Black Thursday, it's been mostly well above, and that will eventually change given enough time to draw out. We won't say it'll change immediately, but it might be a very gradual process just through the ebbing and flowing of the markets, fooling people here and there and getting them to sell for a loss and buy or sell while the market is dropping and buying while the market is rising, etc. So MVRV is a metric we really love, and we definitely recommend you guys look into it more and more. All right, daily active address divergence. I also want to show this. We were in neon red territory, meaning the bottom most bearish 10% territory according to 4 years of data for Bitcoin. We had about just right around 1 week straight of being in that bearish divergence territory. And as the model eventually does, it was able to predict the correction until we got at least more into the mid bearish territory, which means that the bar is above this super danger zone dashed line here. It is still well into bearish territory, guys. I want to emphasize that this model really does a pretty good job of predicting the mid to long term fluctuations of Bitcoin based on the amount of address activity that is going into the network at any given time compared to prices using an algorithm that's not that complicated about the relationship between active addresses and price. So right now we've dropped off, and when we did drop off, that was allowing the active address divergence to be a little more neutral. And as we looked back here, that's kind of what we're seeing, right? We don't see a huge drop off right now. It's mostly just kind of in a flat sort of fluctuating state right now. But if we go, to the long term here, and we'll go to like 2017, check out 3 years worth, we're still seeing quite a rise. It's just not quite where it was in the major bull run in late 2017, and that's going to be key. If we can start getting addresses that are higher than, right here when we're at a peak of, it looks like 1.28 million or so, that's the signal that Bitcoin will probably break out soon after, given enough consistency at those higher levels.
Yeah, these levels of daily active addresses throughout this rally, we talked about this prior, but they kind of, to us, validate the theory that the rally seems to have been mostly propelled by institutional money and large investors, including PayPal, Square, you name it. Most people are aware of the big names that have gone into the market over the last month or so. So the fact that the daily active addresses are still relatively underwhelming compared to Bitcoin's price points to the fact that retail money is still not entirely into this rally. It hasn't still entered the rally completely. So most of November's sort of gains for Bitcoin seems to have been driven by institutional interest. Which, for a sustained rally, we would still need to see the other shoe dropping, right? Retail moving more confidently into the market. For now, that does not seem to be the case just yet, based on the several metrics, including daily active addresses, but also the average sort of transaction value on the Bitcoin blockchain, which has been rising throughout the rally, pointing to the fact that it's not the retail guys that have been moving money on the blockchain, but rather large institutional investors, OTC desks. Those were the sort of the propellers of the current rally, which, while cool in the short term, doesn't necessarily bode well for breaking all-time high and then pushing even further.
Yeah, Dino, you had a great article that went rather viral that I can sort of pull up here while you're talking about it for a bit. Looks like it's lagging. There we go. Maybe touch on just for a couple minutes what you saw in the retail versus whales insight that you
Sure.
put together.
Yeah, so I mean, this is one of the ways that we like to use our Bitcoin holder distribution metric. So what you're seeing here essentially is the combined balances or the combined amount of Bitcoin being held by a specific group of holders. So this first sort of screenshot that Brian is showing is the combined balance of very small Bitcoin addresses to kind of semi-small. So this is addresses holding between 0.001 to 0.01. And then addresses holding 0.01 to 0.1 Bitcoin, and then addresses holding 0.1 to 1 BTC. So these are the three sort of squiggly lines. The green line is obviously the price of BTC. So as you can see, we have seen a strong accumulation period throughout sort of July, August rally, even during the October consolidation. The uptrend was, while relatively timid, still obvious. We have seen all of these addresses, sort of retail sector addresses, start to shrink their combined balances at around November 3rd and 4th. So basically, as Bitcoin broke 13K for the first time in, I can't even remember how long, was it like 6 months or something? They started exiting their positions, and the combined balance of these addresses, so basically very sort of small retail holders of BTC, has started to decline. So this, to us, pointed to the fact that sort of a weak hand shakeout, or basically a redistribution from weak hands into smart money, has occurred fairly early into the rally. So right around the start of November, right? So now, if you scroll down, we also looked at the behavior of larger and larger addresses, and it seems to us that the more Bitcoin they hold, the stronger the hands have become throughout this rally. So this is, we're looking at the combined balances of addresses that are holding between 10 and 100 BTC. So you can call these sort of mid-size holders. I wouldn't necessarily still call them whales, but they're definitely well off, right? 100 BTC are already Bitcoin millionaires. So the fact is that they have also kind of diligently been accumulating throughout the October rally, and then early November, they started dumping around 15.2K. So actually, they were accumulating throughout Bitcoin's rise above 15K. And then once Bitcoin started to drop and retest the 15K support level, this is when we saw them start to exit the market. So this was about a week after the, let's call them fish, or the retail sector started declining their own, when the balances of retail sector started to decline. So about a week later, we saw these mid-level Bitcoin holders start exiting their positions as well. And then if we scroll down even further, this is a group of obviously very large Bitcoin addresses. So anyone holding between 100 to 1,000 BTC. So out of the three, they have sort of been the most consistent in terms of their accumulation patterns. That they started shrinking or declining their balances at around 18K. So basically, the moment that Bitcoin break 18K, we see a consistent, until now at least, decline in the amount of BTC being held by addresses holding between 100 and 1,000 Bitcoin. So sort of Bitcoin whales, or sort of mid-level Bitcoin whales, have started to exit the market at around 18,000. And then finally, we look at the biggest group of, or the largest group of Bitcoin holders, unless you count, the 10,000 to 100,000 BTC group, which is filled with exchange addresses. I usually take those out of the analysis. So here we're looking at the biggest of the investors in Bitcoin. So the combined balances of addresses holding between 1,000 and 10,000 BTC, so multimillionaires. They have continued to accumulate throughout this rally, and they're still accumulating to this day, even into the dip. So as you can see, the patterns, obviously this is not a perfect measure, but I think holder distribution is quite reliable for something like Bitcoin, which is used only as a sort of store of value and means of payment, rather than for something for like Ethereum, which can have a bunch of different use cases. So if you take some caveats and take this with a grain of salt, we can still see the patterns fairly clearly, right? The retail sector has started exiting the market very early into the rally. Mid-level whales have started or have hodled for a while longer before starting to panic sell. And then the biggest Bitcoin holders have kind of kept their, kept their confidence even throughout the sort of recent market shakeouts. So, take that for what you will, but this is what we're seeing in terms of their their recent behavior or their behavior throughout the last month.
Yeah, really fascinating. And long story short, you know, the larger the addresses were, the more patience they exemplified in not selling as the price rise happened. Is that fair to say, Dino?
Exactly. So the question then is, what should you take away from that? I think the thing to take away is that, number one, like we said 5 minutes ago, this rally has been mostly propelled by institutional investors and institutional interest. So the fact that we are still seeing them accumulate despite sort of short-term shakeouts and dips and here and there and market volatility, those are still signs of optimism for Bitcoin sort of midterm potential. Once we see, especially these large groups of holders, the combined balance of addresses holding between 100 and 1,000 and 1,000 to 10,000 Bitcoin. Once we see these two groups start offloading their bags on a more regular and frequent clip, this is where I would start getting very worried. Because it would show me a lack of interest and a lack of confidence in Bitcoin sort of midterm potential. For now, we are still not really seeing that on a large scale. So that's something to keep in mind, despite Bitcoin's drop in the sub 17K once again.
Right. And it's obviously pretty well known that the large whale holders are really going to dictate those markets. So if they're the ones that are holding and accumulating and not being worried about, a drop down to 17, 16K, that's a good sign. It's a very objectively solid bullish argument for Bitcoin, knowing that those with the most at stake are staying strong and they're not showing signs on our holders distribution metric of exiting their positions themselves. Okay, we're looking at the NVT comparison model now for Bitcoin. And this obviously is a longer term model. It's showing each bar representing an entire month of the amount of token circulation, aka the unique amount of tokens moving from address to address, and comparing that to whatever the current market cap is at that level. We are in our second straight month right now, guys, of semi-bullish territory, meaning we are getting an excess of tokens being moved from address to address compared to the current market cap that we're sitting at right now. So there's been an obvious improvement in token circulation as the price has risen. And as long as we're still in green territory, we feel pretty good about the price of Bitcoin being able to stay pretty high. So if you're hoping that Bitcoin's going to drop to 10K and below in the next month or so, you're probably best going to see it if token circulation starts to break down. That may happen due to a very common phenomenon of people freezing up when this kind of volatility starts to happen and people aren't sure whether to buy or sell, so they do nothing. That's kind of a worst case scenario. So what we want to see is that traders are trading into this volatility and continuing to move tokens around. And that would sort of signal the fact that we are going to stay in a healthy range for NVT, which is going to be absolutely key for the price. And I think it's been one of the key triggers for why Bitcoin has dropped or has jumped from 10K to a high of around 19K. So definitely keep an eye on this. Again, just like the MVRV model, if you've got your Sandbase Pro API, you can watch this in real time along with me and along with everyone else who uses it, and it'll be very valuable for your trading. While I'm here, I'll also quickly look at Ethereum, which is looking extremely bullish. You can see even just the last 10 days, these hash marks here are all kind of at or below the average for November, meaning we're not going anywhere. This is almost definitely, I'll even get rid of almost, it is definitely going to be in bullish territory by the end of the month, which will be our 7th straight bullish signal for Ethereum going all the way back to May 2020. I really like to see this. You can see that, especially for Ethereum, it follows this model quite close. When we're in green, the price is, at least 80% or better chance of going up. And then vice versa for red, right? When we were in this red territory, look at how the price just followed along with it because we weren't getting enough token circulation on Ethereum's network. The price was basically declining due to lack of usage. It's surprising to me that a lot of people don't correlate the amount of usage of an actual asset to where the price is going to go. But it's obvious to us that there's a pretty clear correlation, and this model proves it quite well. While we're also on the subject of Ethereum, this is its daily active address performance, guys. Ugh, it does not like me going full screen. I will, I'm just gonna show it on the divergence side instead. That's probably easiest anyways. Okay, so Ethereum has been in red territory for the greater part of almost 4 months now, going back to very late July, August 1st. Looks like August 1st was its first bearish day after just tons and tons of bullishness. So ever since it crossed around 340, 318 actually, that's when it started to get into bearish range. And other than just a few, outlier bullish days, we're mostly getting a deficit in daily active addresses right now. It got much better though. You can see the projected right now is looking like it's its best day since the beginning of November here. And if we get into bullish territory, that could signal a quick turnaround. I do like that we're at least out of neon red range, so we aren't seeing anything that's absolute danger zone like it was back on the 23rd and 24th. But you can see just how accurately it predicted everything, right, guys? 23rd and 24th, look where it was, and price got over 603, and then it dropped off a cliff. That's obviously a pretty nice, foreshadowing indicator for price here. And we can go back to the other neon reds back on September 12th when it topped out at 387. It eventually dropped down the next day to 365-ish. Even going back here at 477, bunch of neon red, dropped off a cliff to 385. So keep a very close eye on this one. Plug in your Sandbase Pro API key, and you'll see that the neon red signals are going to quite accurately nail what those local tops are. Now, for the fact that we're still in bearish territory, keep that in mind as well. Obviously, it's still going to be dictated slightly by what's happening over here with Bitcoin. And this is even more bearish and more concerning than Ethereum right now. That could be kind of something you can look at as well to compare if prices stay where they are for Bitcoin, whether altcoins are going to start popping a little more than where Bitcoin is. And since Ethereum is looking better than Bitcoin, this usually is at least a decent indicator that altcoins will have a little more fun if it flattens out at this range. But don't put too much credence into that. Definitely do your own research and check out many of our other metrics to go along with this. Just note that when Ethereum looks better than Bitcoin, it often is an indicator of a short-term altcoin rally upcoming. All right, one last thing, and I'm going to hand it over to Dino. Bitcoin's coin supply on exchanges. It's a metric that I am loving more and more the more I look at it. Essentially, the concept is the lower the percent of the total supply of Tether and to an extent Bitcoin, they both kind of work together. But in this case, I'm looking at just Tether because it has such a correlation to Bitcoin. The lower that percentage of supply is, the better chance Bitcoin will be able to thrive. As you can see on this big Bitcoin price rally, and I'm going to have fun again and use this indicator. Ever since this rally started, right around here, when it had a big jump in supply and it dropped right here, look what happened right there when Tether's percentage supply started. This is essentially when the rally started for Bitcoin, right at about 11.1K, 11.0, something like that. We were at a total percent of supply on exchanges we were tracking at about 23.5%. And by the time we got to that local top at 19.3, 19.4, we dropped all the way down to 12.5%. So almost a 50% drop in Tether supply on exchanges. Now, that can be explained by a few different things. Obviously, the amount of Tether on the platform will go down if it's being converted to Bitcoin, right? That's the obvious comprehension of it, because people want to buy into Bitcoin and they use the highest volume stablecoin on the market, Tether, to buy it. The other reason that I think that Tether's supply drops is because they want to, there are people who move it offline. Obviously, they will move it to offline exchanges if they are content about not spending it or liquidating it, even for dollars on something like Coinbase. And I think that has an impact as well on the total supply percentage. Some may argue that it's Tether itself printing more, which will have an effect. You know, exchanges and the stable coin have a relationship, and if they need more stable coins for their exchange to keep things liquid, that's when, you know, stable coins will quote unquote print more coins to allow people to trade and have access to be able to buy Bitcoin using that trading pair. But I think it's more so due to the first two. I think it's trader behavior, which is why I really like this metric. If traders are converting to Bitcoin, it's going to show even before the price starts to rise. And that's kind of what we saw here. If you started right here and saw that between September 19th and maybe around, you know, September 30th, that 11-day stretch, seeing that it dropped that much, about 3.5%, that would be a really nice, you know, indication that something good was going to happen to Bitcoin in the near future. And as we can see, this big drop here, look at that brown line that I'm focusing on, 21.99%, all the way down to 17.11% in another week and a half to 2 weeks. That was really the big indication that something, you know, very bullish was about to happen for BTC. And obviously it's finally started to rise back up a little bit. And if you've got Sandbase Pro, you'll be able to see in real time whether or not this supply is going to start rising back up again, or if this is just a blip on the radar, something like this, right? Where it looked like it was going back up, but then it just dropped again. And eventually it has these huge, huge, big upswings. And you want to, these are the profit-taking opportunities. When it's popping up like this to a really high level, that's when you want to be really careful. Obviously, it happened right before Black Thursday here with this huge, huge jump, and it stayed up pretty high. But as soon as it got to around here, around 66 to 6,800, that's when you'll see this supply just drop off a cliff, and that kind of signaled we'd have a long-term bull rally that ended up coming to fruition. So that's all for me. I'm going to hand it over to Dino now, and we'll eventually talk about some other assets you guys have requests for at the end of this call.
Great stuff. Thanks, Brian. Let me share my screen. All right. While I'm sharing my screen, since we're already 40 minutes in, guys, I'm not going to take too much time. I'm just going to do a recap of a few calls that we made before the dump, just to kind of brag about how right we were. And then any sort of coins, questions that you have, let us know in the comments, and we'll get to them afterwards. So I'm going to start with Ethereum. Let me restart my screen. There we go. So we wrote an insight on Ethereum here. So you can see kind of we write quite a few insights. If you go to instead of metrics, you go to insights, and then you'll be able to see all of the insights that we wrote on that specific asset, and then the time that we published it, right? So we wrote an insight on Ethereum when it was here. The title of the insight was "It's above 600, so here's 6 stunning chart." So this was definitely a sort of a bearish call from our side. That, you know, I guess luckily for us, not so luckily for the rest of the market, came into fruition. But more importantly than that, I wanted to show why we thought this correction could be a pretty straightforward possibility. In this article, I mentioned 6 different metrics that we thought were fairly concerning, and then I'll also show one more metric that has realized maybe or materialized maybe 2 hours after I published this insight, which was kind of, I think, the nail in the coffin for the rally. So let's start with the first one, and this is just the social volume for Ethereum, or the amount of mentions to amount of Ethereum related mentions on over 1,000 different crypto-specific social media channels that we track. So this includes Telegram groups, crypto subreddits, Discord channels, Twitter accounts, professional trader chats that are hidden from Google. So we try to capture as much of crypto-related chatter as we can, and then we've created a bunch of different metrics on top of that data, right? So this particular chart is showing the highest amount of while we were writing the article here, right? While Ethereum was kind of hitting 615 here, it showed the highest amount of Ethereum-related mentions of crypto social media since the September 1st stop. So if you've been reading our insights or if you've been joining these calls previously, you would know that very often we see these correlations between the amount of volume, social volume for a particular coin and its price action. And in general, when we see these massive spikes in a coin's social volume during a rally, it usually points to what we call peak hype moments, or it points to the increasingly irrational confidence among market participants in the coin's short-term and even long-term price action. It points to FOMO starting to permeate almost all discussions. Lambos and moon boys coming out of the woodwork, and in general, this is where the smart money and whales begin dumping on the excited crowd. So this is what we've seen very often in the past. We've seen it in August before the correction. We've seen it before the September 1st market-wide correction. We've seen it here. We've also seen it even before the Black Thursday. So this sort of top here during the February rally has also been earmarked by a relatively high spike in social volume for Ethereum. So this is not the first time, and I don't think it will be the last, that we see spikes in Ethereum social volume, especially during a rally, coinciding with short-term price corrections. It's just classic behavior of the crowd, right? This is number one. Now, number two, something that should be kind of pointed or should be talked about with a caveat, but I still think it's very important to notice, is the behavior of Ethereum miners. So what we're seeing here is the combined balance of Ethereum, all Ethereum mining pools in sort of dark brown here, versus the price of Ethereum, which is in green. So as you can see, very often in the near past, throughout the year, we have seen major drop-offs or sort of short-term sell-offs among Ethereum miners coincide with local tops and short-term price corrections for Ethereum. So we had it here in February, even before the Black Thursday drop. We had it here when Ethereum started to consolidate, both of these times. We've obviously had it during sort of a massive decline in Ethereum mining balances during an August and September rally. We've had a shorter one here before Ethereum's sort of midterm correction here. And then finally, we had a massive spike, a drop-off in Ethereum miners' balances before the latest correction. Now, this does need to be taken with a grain of salt, because while Ethereum was still, this was, I think, written on November 24th. So this was still around the time that you could put money or stake Ethereum into a ETH 2.0 deposit contract. So I wouldn't put it out of the question that some of this mining balance, some of this money went from miner addresses directly into a staking contract. That being said, a move is a move, and we have very often seen these types of short-term sell-offs coincide with corrections for the Ethereum price, and it's something that happened once again most recently. Now, another very interesting thing that we noticed is that the average Ethereum fees were up 156% in the last 7 days. So we've seen a similar behavior during a number of different Ethereum tops during its summer rally here. This is, I think, sort of mid-August, and then September 1st, and then once again here, this was, I think, September 17th. This was the launch of Uni token. And then you can kind of see how it impacts the general interaction with the network. But after sort of a month and a half of decline in the average Ethereum fees, or average price to interact with the Ethereum network, basically, we saw a steady uptrend over the last week, which very often tends to price out small ROI interactions. And I think this is also one of the reasons why we're still seeing relatively low amount of daily active addresses for Ethereum, because fees are once again starting to rise. So if you're not, interested in paying $5 or even up to $10 at certain points for a transaction, then you're going to wait for a few days until the fees drop off. So the amount of value being transferred on the Ethereum network by proxy begins to decline. And as a result, we thought that this could also be a relatively bearish signal for Ethereum's price action. And then finally, actually not finally, I'll show a few other metrics. The 30-day MVRV, like we talked about a minute ago for Bitcoin, the 30-day MVRV for Ethereum, or the average unclaimed profits of short-term Ethereum holders, was just about approaching a yearly high. Basically, we were at plus 25%. So all addresses that have acquired ETH in the past 30 days were currently on average at about 25% profit, which is extremely high relative to historical standards, which was one of the reasons why we thought that short-term profit taking and liquidating their positions would be in play. And indeed it was. We have seen a very similar pattern materialize for long-term Ethereum holders. So anybody that has acquired ETH in the past 365 days, their average unclaimed profits has also inched very close to yearly high before we corrected. It was at about 80%, plus 80% on their initial investment, which were the levels that we saw during a September and August highs, right? And then finally, we also saw a strong decline in mean dollar invested age for Ethereum, which points to a network-wide redistribution. So when you see these drop-offs in mean dollar invested age, what it basically means is that on average, the network behavior has gone from accumulation or holding. Basically, the average age of tokens has, or the average amount of time that tokens have stayed in their respective wallets has gone from going up, meaning that they are staying in their respective addresses and they're not moving, to declining, meaning that they are moving more aggressively on the blockchain, pointing to redistribution events, sell-offs, and smart weekends starting to sell off and taking profits. So we've seen this same pattern happen during a August and September top, and then once again we've seen it for a while now, sort of forming a very large valley for Ethereum's mean dollar investment. So these were the 6 charts that I wrote about before Ethereum started correcting, and the price obviously speaks for itself, the price after the publication. However, we've also seen a massive, or probably one of the most important indicators appear maybe a few hours after I wrote this insight, which is a massive spikes in Ethereum's exchange inflow. So, for those unfamiliar with this metric, it basically just tracks the amount of ETH that is moving from individual addresses to known exchange wallets. So if you're seeing a large spike like this in the amount of ETH being moved to exchanges, what it implies usually is a rise in sell-side pressure, people looking to exit their positions and convert into more stable cryptocurrencies, or at least convert into other altcoins or Bitcoin. So the fact that we have seen the biggest spike, this is on an 8-hour interval, the biggest spike in Ethereum's exchange inflow since the September market-wide correction was also a fairly concerning signal for Ethereum's short-term price action. You can also see this in terms of daily active deposits, or the amount of addresses that are moving Ethereum to exchanges, which has also been on a very sharp rise in the last week before the correction. In a word, there's been around 7 or 8 indicators, including both on-chain and social data, that has pointed to a elevated risk of short-term correction. And we wrote about it beforehand, just to kind of keep in mind that this could have been predicted to a point. Obviously, none of these metrics work 100% of the time, but we definitely saw concerning signals for Ethereum's short-term price action. Now, I also wanted to show what the average fees look like now. So when I wrote about it, the average fee was around here. So it was definitely rising, but it wasn't like $5 like we see it here. So actually, let me zoom in so you can see that the average fee to interact with the Ethereum network has climbed sort of into the drop, which to me points to the fact that a lot of people seem to have been withdrawing their Ethereum from active market participation, and maybe pulling them back into complex smart contracts like DeFi and yield farming platforms for the time being, sort of exiting into more less or risk-free versions to continue, operating within the cryptocurrency market until the market volatility calms down a bit. This is also something, to keep in mind, is that we have definitely seen a large sort of network-wide panic right around the time that we experienced the drop-off, as people starting to interact with more complex Ethereum contracts, rising the average fees, pointing to the fact that I think a lot of people may have been, moved their money back into DeFi for the time being, because the profit margins are currently obviously better in comparison, right? The opportunity cost is just greater. So these are a few pointers that I wanted to touch upon as far as what we wrote about before the correction. We've also Gary, if you can share this insight in chat just so people can read it as well, if they're interested, please. And we've also wrote about a number of red flags for Bitcoin on November 25th. So let's go to BTC. Check out insights. So this is when we wrote it. Essentially, it was around here, I think, right? Yeah. So around 19K. We wrote an insight pointing to we're witnessing a strong BTC rally through a bunch of warning signs and red flags. So while we weren't, we stopped short of calling this a top. We pointed to the fact that not only Ethereum but Bitcoin has been showing more and more bearish indicators throughout the last week. On top of like things like social volume, which have been kind of following the same pattern as Ethereum, basically just a huge spike in social volume, pointing to a renewed and increased crowd interest and participation into this rally, and obviously us getting closer to peak hype events. We have also seen a few additional bearish indicators for Bitcoin in particular. For one, the funding rate on a number of different derivative markets, including Bitfinex, Kraken, and Binance. The funding rate has increased to about 3-month highs, basically ever since the August top here at I think it was like 12.9K. The funding rate for Bitcoin was the highest, pointing to the fact that on average, longs were paying shorts, or in general, people that were interacting with derivatives contracts and on the derivative market were more bullish than bearish on Ethereum. And as you can see, oftentimes in the past, we see these sorts of levels of bullishness or bullish sentiment towards derivative investors. They tend to not sustain itself for a long time. They tend to kind of become a self-fulfilling prophecy and lead to a short-term price correction for the coin in question. We have seen this here as Bitcoin kind of stopped rising and started to consolidate in early August, late July. We have seen this during its summer top at 12.9K, and we have also seen this before a September 1st market-wide correction. So the fact that we have once again saw this massive spike in the perpetual contract funding rate was also another relatively concerning signal for us. That's number one. We have also seen a very bullish sentiment towards Bitcoin. So on top of just social volume, which shows the amount of BTC mentions on social media, we have also developed a custom algorithm which tracks the average mood of investors or average mood of social media participants towards a particular cryptocurrency. So here we are looking at the amount or the average sentiment towards Bitcoin throughout the last year on crypto Twitter. And as you can see, very often in the past, these spikes in bullish sentiment tend to coincide with local tops and short-term price corrections for the exact same reason as I mentioned here. Basically, we are witnessing peak hype events. Everybody is completely sure and irrationally confident in the coin's short-term price action, and market never listens to what you want it to do. And so we've seen once again that this sort of rise in bullish sentiment, the highest since May 2020 halvening. The sort of bullish sentiment towards Bitcoin was pointing to an increased risk of a short-term price correction and incoming volatility. So there's a number of different additional indicators that we have covered here. I'm not going to go over all of them. Just wanted to showcase some of the ways that we use our platform and some of the ways that we try to figure out when there might be an increased risk of a short-term price correction or sometimes an increased potential for a short-term bounce back. So both of these insights were written before we experienced the correction for Bitcoin and Ethereum respectively. We were relatively bearish on them in the short term. Just check out both of these to see exactly how we use our data to make these types of predictions. All right, so I'm gonna stop it there as far as my segment is concerned, Brian. Do we have any specific questions that we want to address before we sign off? Any specific points that people are interested in seeing before we end it for this week?
Litecoin is a request, which might be an interesting quick mini analysis we could do.
Let's check out Litecoin. I haven't really been paying too much attention to it recently.
You might want to check out social volume for it. It's I know at least from what I've seen on social media, it's definitely getting an uptick in interest.
Mm-hmm. Yeah, so Gary wrote about Litecoin. What was this? About a week ago. So if you, Gary, if you also want to share this in the chat, just so people can kind of look at the latest analysis that we've done on Litecoin. So about a week ago, I think Gary also pointed to the fact that we have seen some bearish indicators start to kind of form for LTC at the time. So there was a sort of bearish divergence between the amount of addresses on the network, or the basically just the interest in the activity on the network, and the price of Litecoin. There's also been a relatively big spike in social volume. Age consumed has also spiked to a relatively high standard. Yeah, there were definitely some warning signs here. So okay, you said let's start with social volume, right?
Yeah, I think that would be an interesting thing to look at.
Sure. So let's start with
big decline.
Yeah. So okay, looking at it. Yeah, so this is what happened with previous stops for Litecoin. So we see a spike in Litecoin social volume here on February 12th. Then a string of spikes before the inevitable correction. We see a spike sort of in the midway through the rally, not actually at the very top, and then here at the exact top. And then most recently, I think, yeah, so we've actually, the crowd was, the crowd activity and interest was rising until November 20th. So it peaked as Litecoin was breaking 80. So in fact, the crowd was actually a bit early here. The peak hype was early as far as relative to the price action. We've actually rallied about 15 bucks more before consolidating. But even here, like if I were to see this, just knowing historical patterns, I would definitely consider this to be a relatively challenging entry position, to say the least, right? Now let's check out the on-chain activity before Litecoin, just more recently. We can start with daily active addresses. Yeah, so this the type of activity on the very top here usually points to short-term exiting or short-term exodus of holders, probably people moving funds to exchanges. In general, like when you see these very sort of thin spikes in daily active addresses, especially during a rally, you should keep in mind that they're probably not just utility driven, right? They are a lot of this has to do with speculators looking to, in this case, probably exit the coin given its inflated price. Since then, we have kind of fallen back into just a normal sort of territory, I think, for Litecoin's on-chain activity, which is where you want it to be. Ideally, now what we would see next is this sort of rise once again. We would see this sort of uptick, slow but gradual, uptick in Litecoin's daily active addresses over time, pointing to the fact that on average, the interest in the Litecoin network and the interaction with the Litecoin network is once again rising. As far as transaction volume is concerned, let's see. Overall, we see some ebbs and flows, nothing too crazy. So it seems like here is where a lot of people might have been. So yeah, right as we were kind of crossing the 80K, the $80 mark, just similar with the social volume, right? I think both of these metrics spiked right there. Let me see, social volume. And let's look at last the 8-hour interval. Yeah, so pretty much at the same time as the transaction volume peaked, the very shortly afterward, the social volume peaked as well. So this seems to have been the peak interaction with the Litecoin network. And then from then on, I would assume that a lot of this excitement went to Bitcoin and Ethereum because their social volume continued to rally while Litecoin related interest was kind of waned a little bit. For now,
do you want to show the 30-day MVRV for it as well?
Yep. Let's check it out.
From what I'm seeing, the overall divergence for several different MVRVs right now, guys, for Litecoin is showing that it is seeing a pretty moderate bullish divergence now after this correction.
Yep. So this is the average unclaimed profits of short-term Litecoin traders over the last year. So basically, all addresses that have acquired Litecoin in the previous 30 days, you will see their average ROI. So once again, similar to what we talked about with Bitcoin and Ethereum, we see that Litecoin was also approaching, not only approaching, but has actually broken a yearly high in terms of the 30-day MVRV. So the unclaimed profits of short-term Litecoin holders have peaked here at about plus 30%, which I think, so if we take our cool new tool, and let's say I do it from here to here. Yeah. So you can see that we've already kind of breached a yearly high in terms of Litecoin's MVRV, pointing to the fact that we were in a relatively overvalued zone according to Litecoin's MVRV ratio. Now we have experienced a massive drop off, and at the moment the short-term MVRV is about minus 6.4%, pointing to the fact that on average, holders of Litecoin, holders that have acquired the LTC in the past 30 days are currently minus 6.4% of their initial investment. This is relatively good for the coin. Like, once again, I would probably want it to drop even further a little bit to kind of consider an entry position, maybe. Just based on this indicator, obviously, other fundamentals would have to agree with me. But in general, this is probably where I would like, even minus 20%. So we have seen Litecoin's MVRV dip even lower than this before, and if an inevitable bounce back. So if we zoom out a bit, let's see, maybe take up 1 sec, maybe take the last 2 years of data just to kind of see where we are in terms of local bottoms for MVRV. Yeah, so 20%, minus 25%, minus 27%, minus 30%. This is obviously a black swan event. Minus 20%. So between minus 20 and minus 30% usually seems to be the local MVRV bottom, and points to a increased potential for bounce back for Litecoin. So the fact that we are currently at about minus 6% is relatively good. I mean, just think about it from a behavioral perspective. If you're currently at minus 6% on your initial investment, how likely are you to sell at a loss? Or would you be more inclined to hope to see your investment rebound in the next couple of days? So the lower the MVRV, the less sell pressure there is, at least in theory. Especially because once we get into the minus 10, minus 20% territory, anybody who wanted to sell usually has already kind of exited the market already, allowing for a more sort of organic price rise in the next couple of weeks and months. So I would keep an eye on it. This is relatively good, relatively strong decline. We're currently in the negative, but I would still keep an eye on it, and hopefully we see it, drop a little bit more before we consider another sort of entry position. This is the 365-day MVRV for Litecoin, which is currently at about plus 11%. So the long term, yep.
Your connection is so laggy that we cannot see your picture changing. So maybe Brian could take over the screen sharing.
Sorry about that. Yeah, could be my internet is a bit iffy today. So Brian, if you want to take over and finish the Litecoin insight, just go ahead.
Yeah. All right. 30-day. Yeah, so as Dino was saying, we had this massive drop off here. We were at about, we peaked at about plus 30%, obviously very high if you look back over the context of the last 3 months. We can even go back all the way to last year. And it was still the local top by quite a landslide compared to the previous high of around 19.4%. Being down back in the negative for 30 days is obviously a good sign. As Dino said, we could possibly go down a little bit further before we have a very obvious opportunity. Don't expect it to be all the way down at negative 40% like it was during Black Thursday back in March. But typically if we get down to negative 10 to negative 20%, it's generally a good sign for the 30-day MVRV for Litecoin. And as I mentioned right when we started MVRV, the divergence overall ignore these outliers, by the way, guys. There's a little bit of craziness in our data on occasion where something will look really egregious. So I saw someone mention that Binance Coin was looking super bullish for a minute. That was being caused by one MVRV not giving the correct data. So I corrected that on our model, and now you'll see that it's right at neutral. So I want to make sure you guys weren't looking at any false data there. Same with Fetch and Golem. Ignore these. These are outliers right now. But going back to Litecoin, we're at about a plus 0.5 divergence, with 1 being that huge opportunity zone, with -1 being that huge danger zone. So being 3/4 of the way up on that sort of scale here, it's a pretty good sign. And if we look at all MVRVs combined for it, if I can find Litecoin, where did it go? There it is. So Litecoin right here, look at all these MVRVs now that are in the negative after this huge correction here. So a lot of people were buying it on that huge rise when it was plus 70% over the past month, give or take about a week ago from today. So seeing that we have 4 of these key MVRVs in bearish territory now, that's what's causing this opportunity divergence to form and give us a plus 0.5 rating. Now, if it's up at this hashtag or hashed line here, that's the big, almost guarantee that there's going to be a great jump sometime in the near future. But we're not quite there yet. So just take this with a grain of salt and know that it's at least a better time than average to buy Litecoin, assuming Bitcoin here is at a decent level. So if Bitcoin drops off, all of this goes out the window. So keep that in mind. But I like it, at least in the terms of MVRV. And also when Dino showed social volume in the beginning, the fact that that's declining is actually a good thing. We don't want to see social volume super high and the crowd being euphoric about an asset. And we're seeing kind of the opposite with Litecoin right now. It's back to essentially being ignored, which is generally a bullish sign combined with other metrics. Do we have time for one more? I saw Ripple was mentioned. Should we mention it, or
if you want to do like
a
very brief sort of segment, I think outside of that we should probably call it. Also, I wanted to let me share the link to this in chat. If you want to open, if you want to open Litecoin's sentiment as well, sure. You can see so on grabs.sentiment.net/social is probably better than and then just look at the last, let's say last year should be fine. And you can look at either Telegram or Twitter. In both cases, you'll see a massive spike in bullish sentiment towards Litecoin on the platform. Oh, you're looking at Ripple there, but I was thinking.
Oh, sorry, you meant Litecoin. I got you.
Yeah. Yeah, there you go.
Yeah. So yeah, Litecoin did indeed have a massive volume spike in terms of the amount it was being discussed. In fact, it was the highest all the way since January 2019. So about a 20-month high by quite a landslide in terms of positivity and overall mentions.
And I mean, if you look at the previous high, it happened pretty much at the July 2019 top, slightly before, but it was definitely in a danger zone. So this is what I mean by saying, look, bullish sentiment is really a friend to cryptocurrencies. Usually these type of big hype events are not good opportunities to trade. So the fact that we saw this massive spike did point to a short-term correction, which obviously happened. And especially when you look at it from like a market-wide perspective, like pretty much the same chart can be seen for Bitcoin, Ethereum, Litecoin, like all of the top caps have had this massive spike in bullish sentiment, pointing to the fact that market-wide euphoria has peaked, and we need to chill out a bit. So this is probably what happened. Anyway, I think, Ryan, we might want to call it here. It's been about 70 minutes now. So anybody else that has any sort of questions, just check us out on Discord. The link is in the description of this video. We talk about crypto and about specific chart patterns pretty much every day on our trading channels. Just if there were questions that you guys had during the stream that we didn't get to, just ping us up on Discord, and we'll be happy to chat with you guys.
Yeah, particularly with the Ripple request, guys. We don't want to leave you hanging. We're just going a little bit long on this call, and we'd rather stop it here. But come to our Discord, ping us there in the general channel, and we will definitely show a few charts and give you an update. I know many of you may have come from the recent call with Crypto Airy, which was a Crypto Eddie, if I'm pronouncing it correctly, and that was a real great call that I had with her. So thank you guys for joining. If you're from that, we really appreciate your interest in our metrics. As I mentioned in the beginning of the call, we have a 50% off Black Friday 2020 code that you can use on our pricing page. It's for any amount of months that you'd like to purchase. It will be active until Cyber Monday. So you've got, around 72 hours, a little more, to take advantage of this. I highly recommend it. And for now, on behalf of myself and Dino and the rest of our team, we wish you all a great Thanksgiving weekend, and we'll talk to you all next week.
Thank you all, guys. I see still about 50 plus people in the call. Thanks for sticking by to the end. And also, just as a thank you, it would be great if you guys could like this comment and subscribe to the channel, or share whatever you whenever you feel like it, because it definitely helps in letting YouTube know that this content is good and it should be promoted throughout the platform. So if you agree, and if you would like us to create more of it, let us know by liking this video and subscribing. Yeah, thanks Brian, and thanks Gary for handling the call, and I guess I'll talk to you all in 7 days.
Much appreciated, guys. Bye.